Okay, hey there, Sam here with you. So we're just before we get into the analysis here, which I promise I'll keep this short, but just in case any of you that don't follow us on Twitter, haven't seen our Twitter feed update on this, I just wanted to let you know we are running this contest. So we're going to tie this to the release of the new foreign exchange trading content that will be coming out, and this is a series of trainings that we've done. It's oriented more towards someone who's new to foreign exchange trading. So the idea being that we have so many members, so many subscribers that are crypto enthusiasts, while we soldier on through crypto winter. Sure, while it's nice to see Bitcoin back to 4,000, we got a long way to go, and we got a lot of alts that have a long way to go before we can comfortably say that crypto winter has ended. What I'm trying to say. So the idea here is we're going to run this contest here and give away some membership. So it will be tied to tweets, retweets, likes, and shares. We have software that keeps track of it for us automatically. So it's got to be run over on Twitter, but I just wanted any of you that perhaps didn't see that or missed it or for whatever reason. We do have this contest running. It's a random drawing, and every time you tweet, like, share, that'll produce a new entry into the contest, and then we'll do the random drawing on March 20th, and these will be it's something we've done before. First prize will be 2 months of free membership. That's $400 value. Second prize will be 1 month, $200 value. And third prize will be 2 weeks. Third place 2 weeks for $700 prize value here in TDU memberships. So keep that in mind. That will be rolling. So just an update here for you guys that perhaps didn't see it on Twitter. All right, now on to the video. All right, hey there, Sam with you here on, what are we at? So Tuesday the 19th here, kind of midday. And I'm going to tell you that we poll the members every day. We let them pick what gets analyzed here. Now, I'm always happy to see when they're choosing things in the foreign exchange market, because that's where I do most of my trading. So here on the yen, which I trade often here, I've got the daily, right? I'm going to continually remind you that you have to start on the daily. If you don't start there, at least you got to check there when you're trading foreign exchange. So with this daily, we can get great, clear perspective on what we've done. So very obvious, can't miss it, the 5-wave structure coming off of this 2011 low through the, what did we get, 16 or 15 high. So beautiful impulse. Now, it's gotten a little trickier then. So what's making this difficult here for a trader is that there's multiple ways this could be counted. So when in doubt, we want to try and simplify. So we can see here just standard ops. So we get a completed 5, we draw up the 50, we're looking for a reaction, prior 3-4, logical place to bump into some support. Okay, well, the subdivision is here. I'm not in love with the symmetry because the A relative to the C is so askew, but there's a clear impulse coming down. And so if you're analyzing it here, going, well, where are we in the context of what's come prior to it? It's tricky here. So now if you're looking at it here, well, you can go A, B, C. Well, now we look here. So the simplest thing, knowing this is here. Okay, so we know there's an algorithm that bought it here that has this as their target, right? That we can be solid about. Okay, let's pull this off. Now, it's hard to miss the range that we seem to be putting in here. So again, I'm just using this pivot and the multiple pivots here. So clearly a range here. And then look at this series of tags up here. 1, 2, 3, 4. Right. When you see that, you want to start looking for some sort of fib confluence here, because that's so unusual. So there's a... God damn it. Shit, guys. Sorry, I forget to turn that off. Okay, so for those of you that still didn't just have your eardrums popped, here's the simple version here. So we could be looking at this as just the ABC coming down here to correct at the 50. We get an impulse off of that. So you look and you think, okay, well, why not AB 1, 2, 1, 2? Well, that's certainly an alternate. It could be 1, 2, 1, 2. Well, now we look here. So while we can't eliminate that, it's certainly gone deep. So if I'm pulling here on the assumption that I've got this correctly identified as an impulse, will we break the 65 on multiple times? Not an invalidation factor here, because certainly we know the wave 2 can go that deep. Now here it gets a little trickier because the depth here, this is almost a double bottom here, but it's just barely spared. So here, unlike crypto, where you got to check multiple exchanges, if it doesn't overlap here, you don't have to worry about checking other. That is the price. So from here we get, if this is an impulse, and it's not the prettiest. I mean, you've got kind of an ugly 1, 2. Then you got to go 1, 2, 3, 4, 5. You can get it to work, but you could make just as damn near as strong a case as an A, B, C. But then you'd have this lack of symmetry. You'd have the very small AB relative to the C. It's a contender. So one thought is you could label it this way. And this is what makes this tricky. So you could come down here and go ABC into a W. I could go ABC into an X here, and then ABC into a Y here, and then we're into a 1, 2. And I just was referencing this on Twitter. You could count it that way. So 1, 2, 1, 2. Or pardon me, WXY into the low here as an alternate to 1, 2. Well, now we're in 1, 2, right? Fortunately, and this is somewhat unusual, it doesn't change the way you would approach it. Whether this is a 2 or a C, the premise is that now we're 1, 2 here. And then this little diagonal here starts us in the 1. So how are we going to know? Well, you're not going to know until you get more data, because it just could go either way. It just could be any. There's 3 different counts in here, all equally valid. Well, when this kind of a thing here, all of these tops here, well, of course we got to look for some sort of thing. Now, if you draw from the top, it's not as good as if you draw from the B. So if I take the length of the B here, okay, so we go right to the 786 here from this. Now you got to check both of them. So if I go all the way to the back. Okay, so it's not quite as, which makes me go, that's too many times. Are they using something else? Right, that's what we're always trying to do. Now, this looks fairly solid. So this impulsive swing here, retrace. We go right to the 786. I get an impulse down. Now, look at this. 1, 2, 3, 4, 5, 6 times I've banged into that golden zone. That's telling you something. Well, if nothing else, it's telling you that we've got a nice tight range. Well, it's not that small. We've got well, shit, look at that. 104 to 114. We've got a 10-point range. That's pretty wide range, actually. So you got the daily puts it in perspective. That's a 10-point range. So pretty good, pretty solid range here that's being defined. So is that you can't be definitive about the count. So that doesn't necessarily mean don't trade it. It just means understand you're in a range. You're sitting essentially smack dab in the middle of the range as we sit here with this, and you have a bit of an issue here because we had one very deep wick here that was immediately rejected. So what is it? Could it have been just somebody looking for a fill down here at support? Somebody wanted better pricing? Hard to say. Like there is no algo that I can identify that I can tie to that. So it's purely a matter of retesting the support, no matter which way you slice it. Now, every single time it's come into that golden zone, there is selling going on with the anticipation of getting to that target, right? So this algorithm is looking for that. But, of course, the other algorithm was looking for, because this was a 50, is looking for the move up to get to that 23.6. So you've got multiple algos at play here, and you're just stuck in a fib range. So what do you do with that? Well, the bias certainly, regardless of which count you lean into, and there is no way to identify one as, even if you were to think in terms of primary, they're all equally as valid. Well, so what do you do? Well, first you start looking for some market geometry. So, let me start here. So I would just, you start looking. So where is there any evidence? Do I get any clues here? Let me get this right on that corner. It's okay, not bad, but I'm going to check them all. So I know original is going to be too steep. Well, we're far beyond that. So I'm going to go check shift. Well, look at that, right to the tick. So if I get this dialed right on it, I can't get much better than that. W, X, something pivots here, right? That's not insignificant. It's deep. Now, you don't have, it's very hard. What are you looking for? You're looking for any kind of fib confluence here. What do we get? Pull that right over. Okay, so this would be just the kind of confluence that we look for. So I'm still here on a daily. So look at this. We come right, a couple of ticks shy of the median line, a couple of ticks shy of the 100. you've got a contender here for a pivot. So yeah, it's not to the tick right now. It's going to be very awfully close on a daily here, but you're not to the tick on it. But you certainly are in an area where you'd want to be looking for potentially a reaction. So whether it's this prior pivot here, the support here, the structural support, the shift median line, the 100 from the A to the B to the C, there's just enough here to be looking. And even if you didn't take that, well, you'd want to see what came off of it. Well, here, likely, if you were thinking, oh, we're into a 1-2, well, likely you got stopped out here, right? So if you were thinking, oh, the ABC or the Y or the 2 is in 1-2, that's so deep, anyone taking that retracement, unless you were giving it a whole lot of room, it has already been stopped out. So now it's a wait and see. And we did have, so if I go down to the 4 hour here and look at this, you can see this wick is just an extreme. It almost looks like a flash crash. It's just boom and immediately rejected. So coming off of that, it's a bit of a judgment call. So we know, regardless, that there will be an algorithm that will use that as the low, because that's the pivot low. But for us here as Elliott traders, would you call that 1-2? So what do you use? Well, you do have this small, if I zoom in here, you do have this secondary pivot here. Let me mark that so we can potentially, that's something to consider using. So if we look there, then that makes a little more sense. So if I use this pivot and I go into my 1 here, now we're between the 50 and the 618 algo target second. So you could make a case now that I've got much better structure here if I look between the proposed. Here, let me take this off. The new proposed pivot to consider, right? You're always just your best estimate here. If we use this as the start, we get the swing from the beginning of the 1 through the pivot of the 3. We come to the 50, we go 2, and it's not to the tick, but you could certainly make a case here for a completed leading diagonal into a 1. So it gets tougher here when you're looking, saying, well, where do I want to trade that? Well, you do have a little structure here, so you can use this area here. If you're going to look for a 2 to a 1-6, or pardon me, a 2 to a 6-1-8, I mean, we know this is where we'd be looking for the next buy side. But because I have this problem with this pivot here, right, so if I'm going to use the whole thing, then it has to lower down here. So if I'm going to use this as a completed 1 and say, well, I just had an extension in the 1, well, it distorts a little bit. So again, this would be the 23 rather than the 50. But if we look at that and say, okay, completed leading diagonal, the extension's in the 1. All right, I can live with that. So where's your next opportunity? Down here, we'd be looking for the 50. Well, I'd be paying attention here to the possibility that we get something more shallow here. So if it came to this level, I'd be looking there. See, do I like what I see? Do I like the subdivision? Is it all, if this is completed 5, do I get a nice ABC to give me comfort in the pattern there? And then look maybe, so because of the irregularity here, I'd likely be looking at smaller size here, knowing that I might have to pull this down. So it becomes a buy here off of the structure, because that's a pretty steep front run if we're using the pivot low here. Well, let me get right on it. A bit of a front run on the 38, knowing that I might have to pull this down to the lower range here. So I wouldn't be overly aggressive here, but I might get a toe in the water here. I might take a smaller position, anticipating that I might be laddering in as it comes down. Tough one when you see that, right? It's hard to know what to use, other than you can be sure that the pivot, if there's one trade there, that's all it takes. There will be software down here looking to buy that, but does it get there or not? Hard to say. So you gotta use your best judgment there. So stepping back, it's hard to say anything other than we're range bound. But here now, so this is sort of a good example. If you just pull up the 4 hour, you better have some context as to where you are in the larger counter. You're just blind here. You got to see where you are, where we've been, and then of course the whole point of the Elliott is just to try and organize it. So you can get some sense of probability zone. So this is your probability zone. You have that judgment call that needs to be made here. Now, if we go down, excuse me, go down to the hourly, bring on one of the, let's come over here. We'll just bring on part of this template. This is from our newer series here. So we look here, so this is just a series of different moving averages. So this is one of the FX templates that I use and like and demonstrate. So the idea being here that we have consolidation, we have expansion. So correction, consolidation, expansion. And the idea here is this is just making it easy for you to stay on the right side of the market. Right, so I go over this in pretty good detail in the FX series that well, members have already got it. But if you're watching here on YouTube, we've gone through a lot of this. It's not terribly complicated. It's just interesting the way the color coding has worked. So if I pull this off here, you can see it a little bit better. So you can see the idea here being, and I've got some of the indicators down here. So we go into consolidation here. All right, so as the moving averages come together, it's consistent here. Expansion, you see who's in control. All right, this is a bulls versus bears. So bulls fully in control here. Bears take over as we come down here. Now we sit in this consolidation zone. And you know, do we have enough to make a trade here? Well, this looks like if that as completed, likely A, B, C still yet to go in. So where are we going to look for that? If we're pulling all the way from the low, well, it's going to be tricky. If you're pulling from this secondary low, that might shape up a little bit better. Shit, I gotta get way the hell down there. Boy, that was deep. So if I pull from the secondary low, would that make sense? Well, certainly I'd be on all of my moving averages would have flipped over. So if I've gone A, B, C, and can I get down this far? Right, and that's using the secondary pivot. So maybe this is just getting started. This could easily be the 1, 2 of the A. In fact, that's my guess is that's more likely here. So let's come back here. So if this is 1, 2, 3, 4, 5, that's just likely. So it's very common for the A wave to tag the 50. But again, you're not going to know which one to use until you see the reaction there. That's the bitch of what's happening with the yen here because of that extreme wick. So I would keep it here until proven otherwise. So the idea being we'd be looking for an A, a B, and a C, something like that to correct the whole thing. So now if I go back to a 4-hour, that starts to make more sense. You can see the symmetry there looks a little better. And that, again, assuming we're using the secondary pivot, that would put us at the golden zone. So again, looks very much like could just be the A wave getting started here. But again, we could just keep going higher. So I'm not saying that's jump on the short there. I'm saying there's not enough information, and because of the challenge here, I want to see some reaction at one of these pivots. I want to see if I can identify what they're using, because that's all we can ever do. Right? We never know what they're using. We just look for their footprint. Well, here, right, you're rolling dice. So I want to see a reaction. Do I get a reaction here? And if I come back up, maybe I can get my A, B, C, and then if I like that, then I look much better here. But here you can't use the, you'd have to just use a risk factor here relative to your account size here to take that trade. You can't just give it all the way down to the low. Even the 786 is fairly good size there. So approach with caution in here. This is a tricky one because this is a problem. So, one thought is, well, all right, until we get more data here, I'm going to avoid trading the yen because I'm not sure about this. Or I'm going to wait and see what kind of reaction do I get here at this is a potential 50. So it's a bit of a hurry up and wait here. Just too much risk to try and jump on this without knowing which pivot to use. All right, so that's pretty much all I can add there. So hurry up and wait, but look for that 108, 108.95 in that range. I'd want to see a reaction there. Okay, guys, that's it for now. Back to you.